Hello students and welcome to the lecture. So students, as you can see here that basically in this lecture we are going to start our discussion over the RBI, the banking and the currency system. And this is going to be our part 1 for the discussion of this particular topic. Okay, like talking about this, we all know that the RBI is the Central Bank of India that actually regulates all the banking sector, as well as because it is the entity which formulates the currency and the monetary system. So it regulates both of these areas. And this area is actually the main backbone of an economy. Got it? So that's why it is important, not only just because the competitive exams viewpoint, but also if you really want to enhance your knowledge regarding the things. And that should be our ultimate aim, sorry, not multiple, ultimate aim. Got it? So in this lecture, we will start with the RBI and its functions. We will look upon them. We will talk about the formation of RBI, like how does it form. We will talk about the origins of the Reserve Bank of India, RBI as an organization, subsidiaries of the RBI, we will see. Then we will see the brief on the Deposit Insurance and Credit Guarantee Corporation of India, DICGC. We will talk about the National Housing Bank, NHB. Talk about the Bharati Reserve Bank, Note Mudran Private Limited, BRBN MPL. We will talk about the current office holders, talk about the functions of the RBI, talk about the other important points that are related to the RBI. Then we will talk about the monetary policy of the RBI, goals of the monetary policy of RBI, monetary policy framework, the monetary policy process, and at last we will have the discussion over the summary of all the things that we will cover. Okay? But before starting this discussion, as usual, we have our small disclaimer presented over here that we require to understand before we proceed further. Okay? So a disclaimer is like that. The images used in our slide deck are for educational purposes only. We respect the intellectual property rights of the original creators and owners of these images. If you are the owner of any of the images used in this deck and have any concerns or issues, please contact us at sathee@iitk.ac.in and we shall remove the images. Okay. Now let's begin with the Reserve Bank of India. So before talking about this, let us get back to the history of the Indian currency or the Indian economy. Then only we will be able to talk about the RBI, and then we will understand like how did it formed. So basically that was a time when the Britishers came into the country. Before the Britishers, we had the monetary system also, but not as that much that the Britishers introduced. Okay. So when the Britishers introduced the monetary economy, basically they wanted Indians to use the money instead of exchanging the things for the things, like the typical barter system. Okay. So in their voyage of creating a monetary economy, basically they felt that the Indians must have access to the modern banking system. Then only they will become habitual about the barter system and all. As a result of this, that was the year of 1806 when the first bank was established by the Britishers. The bank was the Bank of Bengal. Okay. Prior to this, in 1770, we had already a bank like a Bank of Hindustan, 1793, General Bank of India. These banks were there. But actually, these all were the private banks. Okay. And these were not that much succeed. So that's why the Britishers decided to establish a bank by themselves. In order to do this, they established the Bank of Bengal in 1806. Thereafter, in 1840, they established the Bank of Bombay. In 1843, they established the Bank of Madras. These three banks were established by the Britishers All these three were called as the Presidency's Bank. Why? Because the Britishers having the three presidencies in the country: Bombay, Bengal, and Madras. Got it? So that's why they established their banks in these three presidencies: Bengal Presidency, Bombay Presidency, and Madras Presidency. Got it? These were the areas where they established their banks. In 1876, not 73. In 1876, they passed a new law known as the Presidency's Bank Amendment Act. Under this, they merged the management of all the three presidencies' banks. Then, when the 20th century arrived, basically the Europeans, other than the Britishers, I'm talking about European containing the French, Portuguese, Spanish, Danish, and so many, they started coming to the country. And that's why the Britishers felt a fear for the first time from the outsiders. They wanted to establish something as a central bank so that the Britishers could align their policy as per the central policy and could be implemented throughout the country uniformly. So they wanted to create a new central bank. The first idea which they generated, that idea was the three presidencies banks must be merged together and established as a central bank. Somehow this decision was not fulfilled. Why? It is written down here. Like RBI is the Central Bank of India, known as the Bankers Bank. Okay. Now, why the idea of merging all the three presidencies bank and creating a one could not succeed? So that could be from here. The origins of RBI could be introduced traced to the 1926, when the Britishers appointed the Royal Commission on Indian Currency and Finance, which was famously known as the Hilton-Young Commission. Actually, the Britishers appointed this commission to look after the idea. Okay. And this commission rejected the idea of merging the three presidencies bank and creating the one. Okay. The commission recommended the two ways. First, all the three presidencies banks must be merged together and establish a new bank. But that new bank should not be a central bank. Okay. So that bank, which was created by merging all the three presidencies banks, that bank was Imperial Bank of India. That was established in 1921, and later on, as we know, in 1955, the Imperial Bank of India got nationalized under the name of State Bank of India. Okay, so now we know the Britishers did not establish the Imperial Bank of India as a central bank. So the second idea of the commission was creating a new bank and establish the new bank as a central bank. That basically picked by the Britishers. So the Hilton-Young Commission recommended the creation of the Central Bank for India to separate the control of currency and credit from the government and augment banking facility throughout the country. Okay. And because the Imperial Bank of India was not the Central Bank of India, so that's why the RBI Act of 1934 was created by the Britishers. And that act was responsible to establish the Reserve Bank in India, which became operational from 1st April 1935. So that's how the journey, which was began in the 1770 by establishing the Bank of Hindustan, that journey was the first stage of creating an idea of RBI. And in 1935, finally, that idea was envisaged. When the Reserve Bank of India got set up, the central office of the Reserve Bank was initially established in the Calcutta, that is now known as the Kolkata, which is the capital of Bengal. But after some time, it was permanently moved to the Mumbai in 1937. Still, after independence, we have maintained a central office of Reserve Bank at Mumbai. Okay, so it was permanently moved to the Mumbai in 1937. When it was started, the business, starting as a private shareholders bank. Okay, the Reserve Bank of India was nationalized later in 1949. aimed at achieving the coordination between the policies of the government and those of the central bank. Okay, like when the Britishers established it, what does the Britishers wanted? The Britishers wanted that the credit, which means granting a loan, and the currency supply, that must be separated from the government. Okay, that's why they started the Reserve Bank of India as the private stakeholders bank, so that the government could not interfere more in the operation of reserve banks. But when India got independence, the independent India's new government did not want Reserve Bank to work as a private shareholder. That's why we nationalized it in the year of 1949, aimed at achieving the coordination between the government policies and the policies of the central bank as far as the control of currency and credit is considered. Got it? Now, when we move further, we got the origins of the Reserve Bank of India with the timeline, like when and how the Reserve Bank of India got operational. First, 1926. That was a time when the Royal Commission of Indian Currency and Finance recommended the creation of a central bank for India, rejecting the idea of creating the Imperial Bank of India as a central bank of India. Okay. Then comes 1927. 1927 was the year when a bill to give effect to the above recommendations got introduced in the Legislative Assembly of British India. But that was later withdrawn due to the lack of agreement among various sections of the people. Like we can say, following the recommendations of the Commission 1926, the bill for creating the, you can say the bank, was presented in 1927. Because of the disagreement and animosity, that bill had to be withdrawn. In 1933, the White Paper on Indian Constitutional Reforms recommended the creation of a Reserve Bank. Okay. A fresh bill was introduced in the Legislative Assembly. Got it? Then in 1934, finally, the bill was passed and received the Governor General's assent. As a result of which, in 1935, the Reserve Bank of India got established and commenced operation as the India's central bank on April 1 as a private shareholders bank, because as I have told you, Britishers wanted to establish an entity which is actually not in line with the government in terms of credit and currency control. So that's why it's established as a private shareholders bank. And the paid up capital of that time was given as a rupees 5 crore or rupees 50 million. Okay. In 1942, the Reserve Bank ceased to be the currency issuing authority of Burma, now Myanmar. Because before the war, okay, like we know, 1939, the Second World War was started and continued till 1945. Before the war, the Burma or the Myanmar, that was also the part of the British India. Okay, so that's why the Reserve Bank of India was the currency issuing authority of Burma. Later on, when the war began in the country, okay, and the Britishers got involved in this, the Britishers finally released Burma as the new country. Okay, and when Burma is no longer a part of the, you can say British India, so that's why the Reserve Bank of India got also ceased to be the currency issuing authority of Burma. In 1947, Reserve Bank stopped acting as the banker to the government of Burma. Like we can say, when India got independent, alright, the Reserve Bank of India also stopped its function as banker to the government of Burma because the government of Burma was not the part of government of India. In 1948, the Reserve Bank stopped rendering the central banking services to the Pakistan. Like we know, basically the Pakistan was also the part of the country. Okay. In 1947, when we both got separated from each other, basically for 1 year, the Reserve Bank of India worked as a central bank for the Pakistan. Got it? In 1948, it stops its service as a central bank to the Pakistan. 1949, Government of India nationalized the Reserve Bank under the Reserve Bank Transfer of Public Ownership Act 1948. Okay, like we know, it was established as a private shareholders bank. So to nationalize it, the government passed a separate act that is known as the Reserve Bank Transfer of Public Ownership Act 1948, which nationalized it in 1949. Okay. Now RBI as an organization. How does the RBI work as an organization? This is to be discussed. The Central Board of Directors is at the top of Reserve Bank's organizational structure. Like if we talk about the Reserve Bank as an organization, then the Central Board of Directors or CBD, that is the topmost management of the Reserve Bank of India. These are appointed by the government under the provisions of Reserve Bank of India Act 1934. Okay, like the procedure, the mechanism that is to be followed. This all is mentioned under the Reserve Bank of India Act 1934. The governor is the Reserve Bank's chief executive. Like we know, CEO, chief executive officer. So who will be the chief executive officer of the Reserve Bank? The governor of the Reserve Bank of India, that will be the chief executive officer of the Reserve Bank. He supervises and directs the affairs and business of the Reserve Bank of India. Okay. The top management team also includes the deputy governors and the executive directors. Okay. The central government nominates the 14 directors on the central board of the Reserve Bank of India, including one director each from the 4 local boards. The other 10 directors represent different sectors of the economy. So that we could say, while formulating a policy, different industries, sectors, boards, their viewpoints could be considered in that, so that a comprehensive and well-detailed policy could be prepared. All these appointments made for the period of 4 years. So we could say, like, what is the tenure to be the part of the top leadership of the Reserve Bank? 4 years. Okay. The person to get nominated or appointed to the Reserve Bank of India could continue the office till 4 years only. Okay. The government also nominates the one government official as a director representing the government. Okay. Like we can say, the government also ensure its representation in the board. Okay. So the person who appointed as a government official is usually the finance secretary to the government of India. Remains on the board during the pleasure of the central government, which means there is no fixed limit for the finance secretary to be the part of the, you can say, Central Bank of India. Basically, it's totally depend upon the pleasure of the central government, how long they want him to hold the office. The Reserve Bank governor and a maximum of 4 deputy governors are also the ex officio directors of the central bank. Okay. Now, subsidiaries of the Reserve Bank of India. Like we can say, Reserve Bank of India is an organization itself. Okay. This organization is a parent organization to 3 or other organizations. These are known as the fully owned subsidiaries of Reserve Bank of India, which means no other authority, organization, or entity having the share in these organizations. Okay. And these organizations are Deposit Insurance and Credit Guarantee Corporation of India, DICGC, Bharati Reserve Bank Node Mudran Private Limited, BRBN MPL, National Housing Bank, NHB. Okay. These are the 3 subsidiaries. The first subsidiary is Deposit Insurance and Credit Guarantee Corporation of India, or DICGC. Okay. With a view to integrating the functions of Deposit Insurance and Credit Guarantee, the Deposit Insurance Corporation and Credit Guarantee Corporation of India, they both were separate entity but got merged and present the Deposit Insurance and Credit Guarantee Corporation, DICGC, that came into existence on July 15, 1978. Okay. This was established under the DICGC Act 1996. Okay. Ensures the all deposits like savings, fixed, current, and recurring deposit with eligible banks except some deposits that we'll study in the chapter related to the DICGC, which we had already covered. The second subsidiary is Reserve Bank's National Housing Bank. Reserve Bank's National Housing Bank, also known as the NHB. Okay. So National Housing Bank was set up on July 9, 1988 under the National Housing Bank Act 1987. Okay. And that was also the wholly owned subsidiaries of the Reserve Bank to act as an apex level institution for housing. Like whatsoever bank or institutions that are involved in financing the housing sector of the country, these all will be under the National Housing Bank. The National Housing Bank will be at the top of these. So that's why it is known as the apex level institution for housing. Okay. The last one was Bharati Reserve Bank Note Mudran Private Limited, BNMPL. RBI established BNMPL in Feb 1995 as a wholly owned subsidiary to augment the production of banknotes in India and enable bridging of the gap between supply and demand for banknotes in the country. Okay. It has been registered as the public limited company under the Companies Act 1956 with its registered corporate office, which is situated at the Bangalore. Okay. And this is also under the Reserve Bank of India. Now, whosoever are the current office holders, present governor of the Reserve Bank of India is Shaktikanta Das. Deputy governor, 4 are there. The first is BP Kanugu. Second is Mahesh Kumar Jain, deputy governor. Third is Michael Patra, deputy governor. And fourth is M. Rajeshwar Rao, deputy governor. Okay. These are the current office holders, but it is requested to all of you kindly be updated with them because these could be, you can say, modified. All right. The new doctor could be appointed. The old one could be retired. So that's why it is important to regular following the things. The functions of the Reserve Bank of India. Now let's have a talk on this. First is the monetary authority. Formulates, implements and monitors the monetary policy of the country. Objective is to maintain the price stability while keeping in mind the objective of growth. Then, regulator and supervisor of the financial system. Prescribes the broad parameters of banking operations within which the country's banking and financial system works. Objective, maintain the public confidence in the system, protect the depositors' interest, provide the cost-effective banking services to the public. Okay. Manager of Foreign Exchange. It manages the Foreign Exchange Management Act 1999. Objective: to facilitate the external trade and payment and promote the orderly development and maintenance of the foreign exchange market in India. Then, issuer of currency. Issues and exchanges or destroys the currency and coins note for fit circulation. Objective: to give the public adequate quantity of supplies of currency notes and coins and in good quality. Also, RBI performs a wide range of promotional functions to support national objectives. Banker to the government, performs merchant banking functions for the central and the state government, also act as their bank. Bankers to the bank, maintains the banking accounts of all the scheduled banks. Then, what is the financial supervision by the RBI with the BFS as a function of the RBI? So basically, RBI performs the function of financial supervision under the guidance of Board for Financial Supervision's BFS. This way was constituted in November 1994 as a committee of Central Board of Directors of the Reserve Bank of India. The objective is to undertake consolidate supervision of the financial sector comprising the commercial bank, financial institutions and non-banking financial companies, also known as NBFCs. The board is constituted by co-opting 4 directors from the central board as member for a term of 2 years and chaired by the governor. Other important points related to the Reserve Bank of India. First, it has 27 regional offices, most of them in state capitals, and 4 sub-offices. 5 training establishments, 2 namely known as the College of Agricultural Banking. First, second, Reserve Bank of India Staff College. These are the part of Reserve Bank. Then, others are autonomous such as National Institute for Bank Management, Indira Gandhi Institute for Development Research, Institute for Development Research in Banking Technology, etc. Okay. Now, the acts administered by the Reserve Bank of India. First, Reserve Bank of India Act 1984, Public Debt Act 1984, Government Securities Act 2006, Government Securities Regulation 2007, Banking Regulation Act 1949, Foreign Exchange Management Act 1999. Securitization and Reconstruction of Financial Assets and Enforcement of Security Interest Act 2002, Credit Information Companies Regulation Act 2005, Payment and Settlements Act 2007, Payment and Settlement Systems Regulations 2008, amended up to 2011, and BPSS Regulations 2008. The Payment and Settlement System Amendment Act 2015, number 18 of 2015, and Factoring Regulation Act 2011. Now, what is the monetary policy of Reserve Bank of India? So, monetary policy refers to the policy of the RBI with regard to the use of monetary instruments under its control to achieve the goals specified under the Reserve Bank of India Act 1934. Goals of the monetary policy of RBI. Primary objective is to price stability while keeping in mind the objective of growth. In May 2016, the Reserve Bank of India Act 1934 was amended to provide a statutory basis for the implementation of flexible inflation targeting framework. Act also provides for the inflation target to be set up by the Government of India in consultation with the Reserve Bank once in every 5 years. Monetary policy frameworks aims at setting the policy repo rate based on an assessment of the current and evolving the macroeconomic situation and modulation of liquidity conditions to anchor money market rates at or around the repo rate. Repo rate changes transmit through the money market to the entire financial system, which in turn influences the aggregate demand, a key determinant of the inflation and growth. What is the monetary policy process? Section 45ZV of the Amendment Act 1934 also provides for an empowered 6-member monetary policy committee to be constituted by the central government by notification in the official gazette. Accordingly, the central government in September 2016 constituted the MPC as under: first, Governor of the Reserve Bank of India, Chairperson ex officio, Deputy Governor of the Reserve Bank of India in charge of the monetary policy, member ex officio, one officer of the Reserve Bank of India to be nominated by the central government, member ex officio, Shri Chetan Ghate, Professor, member, and other people also. Remember, the same thing we will do here like we did in the current holding of the Reserve Bank of India. Like these names could be changed anytime, so you have to check it by yourself on the regular basis. Member refers to 4 to 6 hours will hold office for the period of 4 years or until further orders, whichever is earlier. The MPC determines the policy interest rate required to achieve the inflation target. Reserve Bank's Monetary Policy Department assists the MPC in formulating the monetary policy. Financial Market Operations Department operationalizes the monetary policy mainly through day-to-day liquidity management operations and all. Here we have finished the topic. Now it's part for summary. We have seen the Reserve Bank of India overview as a central bank, establishment, location change, nationalization. Historical timelines we have seen 1926, 1927, 1933, 1934, 1942, 1949. Organization structures we have seen like the Central Board of Directors, Governor, Directors. Subsidiaries we have seen like DICGC, BRBN, MPL, NHB. Key functions of RBI we have seen like Monetary Authority, Regulator of Financial System, Manager of Foreign Exchange, Issuer of Currency, Banker to the Government and Banker to the Banks. Financial Supervision we have seen Board for Financial Supervision. Regional presence and training we have seen like the offices and training institutions. Acts administered by the RBIs we have seen these acts, right? Monetary policy framework we have seen like objective, MPC formation, repo rate and all. Current MPC members, as I have told you, these could be changed anytime. So with this note, we have finished the topic. It is advisable to all of you kindly revise the facts and figures that all we have discussed in this lecture and keep yourself ready for the next lecture. With this note, let's end this lecture and thank you.